Have you ever wondered if flipping houses in Florida could still make you rich in 2026? Or if that ship has already sailed? What I'm about to reveal might completely change how you think about real estate investing in the Sunshine State. Stay with me, because by the end of this video, you'll know exactly whether Florida fix and flip deals can still generate serious profits, and more importantly, how to spot the opportunities everyone else is missing. I'm about to break down the current Florida real estate market in a way that most investors completely overlook. We're going to dive deep into the numbers, the strategies, and the insider knowledge that separates profitable flippers from those who lose their shirts. But first, let me ask you something that might surprise you. When most people think about house flipping in Florida, they immediately picture Miami Beach penthouses or beachfront properties in Tampa. But what if I told you that some of the most profitable opportunities right now are hiding in plain sight in neighborhoods that most investors wouldn't even consider? What if the secret to successful flipping in Florida has nothing to do with location, and everything to do with timing, targeting, and understanding market psychology? Here's what's really happening in Florida's fix and flip market right now. The landscape has shifted dramatically since 2020, and if you're still using old strategies, you're probably bleeding money without even realizing it. The days of buying any distressed property, slapping on some paint, and flipping it for a quick $30,000 profit are over. But that doesn't mean the opportunities have disappeared. They've just evolved. Let me paint you a picture of what's actually happening on the ground in Florida right now. Interest rates have created a completely new dynamic. Inventory levels are fluctuating in ways we haven't seen before. Construction costs have stabilized in some areas while remaining elevated in others. And here's the kicker: buyer behavior has fundamentally changed. The people purchasing flipped homes today have different expectations, different budgets, and different priorities than they did even 2 years ago. But before we dive into the current market conditions, let me share something that might shock you. Last month, I analyzed over 200 completed flip transactions across Florida, from Jacksonville to Key West. What I discovered completely contradicted everything the mainstream real estate media has been saying about Florida flipping. Some markets that everyone claims are oversaturated are actually producing consistent profits. Meanwhile, some areas that look promising on paper are absolute profit killers. The truth is, Florida's fix and flip market right now is like a chess game where most players are still using checkers strategies. If you understand the new rules, you can absolutely still make money. If you don't, you'll get crushed by investors who do. So let's start with the elephant in the room. Everyone wants to know about profitability. Can you still make money flipping houses in Florida? The short answer is yes, but with a massive caveat. The margins have compressed, the competition has intensified, and the margin for error has shrunk to almost nothing. This means that amateur hour is over. You need to be surgical in your approach. Here's what profitable flippers are doing differently in 2026. First, they're focusing on acquisition cost like never before. In the past, you could overpay for a property and still make money on the back end because appreciation was covering your mistakes. That safety net is gone. Today's successful flippers are buying properties at prices that seem almost impossible to achieve. But they're doing it by understanding something most investors miss. They're not competing with other flippers. They're creating their own deal flow through relationships, off-market strategies, and by solving problems that traditional buyers can't or won't handle. They're buying properties with foundation issues, title problems, or unusual circumstances that scare away retail buyers and most investors. But here's the key. They're buying these properties at such deep discounts that even after fixing the complex problems, their total investment is still below market value. Let me give you a real example from Orlando. A flipper I know recently purchased a property for $65,000. Sounds cheap, right? But this house had a foundation problem that would cost $15,000 to fix. Plus, it needed a complete renovation estimated at $45,000. Total investment of $125,000. The after repair value was $170,000. That's a gross profit of $45,000. But after holding costs, transaction costs, and unexpected overruns, the net profit was around $28,000. Now, $28,000 might sound good, but this deal took 6 months to complete and tied up $125,000 in capital. That's an annual return of about 45%, which is solid but not spectacular, and this was considered a good deal by current standards. Compare that to what was happening in Florida just 3 years ago, when flippers were regularly seeing returns of 100% or more annually. The game has definitely changed, but it hasn't ended. The successful flippers are adapting by focusing on 3 critical areas that most people ignore. First, they're becoming specialists rather than generalists. Instead of flipping any type of property in any area, they're focusing on specific property types in specific neighborhoods where they've developed deep expertise and relationships. Second, they're treating flipping like a business with systems and processes, not like a hobby or side hustle. They have established relationships with contractors, suppliers, real estate agents, and lenders. They've systematized their renovation process to minimize time and cost overruns. They're tracking metrics that most flippers never even consider. Third, and this is crucial, they're focusing on value creation rather than just cosmetic improvements. They're adding square footage, reconfiguring layouts, or addressing structural issues that allow them to truly transform a property rather than just making it prettier. But here's where it gets really interesting. The most successful Florida flippers right now aren't just fixing and flipping. They're using a hybrid approach that might surprise you. Some are holding properties as rentals if the flip market is soft in their area. Others are wholesaling properties when they can't get the margins they need for a flip. The smartest ones are building a portfolio that includes flips, rentals, and wholesale deals, allowing them to adapt to changing market conditions. Now, let's talk about specific markets within Florida, because treating the entire state as one market is a huge mistake. Florida is incredibly diverse, and each metro area has its own dynamics, opportunities, and challenges. Miami-Dade County is probably the most challenging market for flippers right now. High acquisition costs, expensive labor, and sophisticated competition make it extremely difficult for new or small-scale flippers to succeed. However, experienced flippers with deep pockets are still finding opportunities in emerging neighborhoods, and by focusing on higher-end properties where margins can justify the increased costs and risks. The Tampa Bay area presents a different set of opportunities and challenges. The market here is more stable than Miami, but it's also more competitive among flippers. The sweet spot seems to be in properties priced between $150,000 and $300,000 after repair value. Below that range, the margins are too thin. Above that range, the buyer pool becomes too narrow. Orlando continues to be interesting for flippers, particularly because of its diverse economy and consistent population growth. The key in Orlando is understanding the micro markets. Properties near major employment centers or in school districts with good ratings tend to flip faster and for higher margins. Jacksonville is emerging as one of the more flipper-friendly markets in Florida. Lower acquisition costs, reasonable construction expenses, and a growing population create opportunities for both new and experienced flippers. The challenge is that the market is less predictable than more established metros. Southwest Florida, including Fort Myers and Naples, offers opportunities for flippers willing to target specific buyer demographics. The retiree market creates demand for certain property features and layouts that flippers can capitalize on if they understand the buyer preferences. But here's something most people don't realize about Florida flipping. The most profitable opportunities right now might not be in the major metros at all. Some of the best returns are happening in secondary and tertiary markets that most investors ignore. Towns with populations between 20,000 and 100,000, places with growing employment but limited new construction, areas where you can still buy distressed properties at significant discounts. The key is understanding what drives demand in these smaller markets. It might be a new hospital being built, a major employer expanding, or simply a lack of quality housing stock. Flippers, who do their homework and understand local market drivers, can find opportunities that produce returns similar to what major metros offered 5 years ago. Now let's address the practical challenges of flipping in Florida right now. Construction costs remain elevated compared to pre-pandemic levels, but they've stabilized in most areas. The key is developing relationships with contractors who can provide consistent pricing and quality work. Many flippers are struggling because they're constantly scrambling to find contractors and getting different prices on every project. The successful flippers have a stable of 3 to 5 contractors they work with regularly. They provide steady work in exchange for consistent pricing and priority scheduling. They've also learned to design their renovations around material and labor availability rather than just focusing on aesthetic preferences. Permitting can be a major challenge, particularly in some counties and cities. Flippers need to understand local permitting requirements and build permit time into their project timelines. In some areas, permitting delays can add months to a project, completely destroying profitability. Another challenge is financing. Traditional hard money lenders have tightened their underwriting standards and increased their rates. Many flippers are turning to alternative funding sources, including private lenders, partnerships, and even seller financing on the acquisition side. But here's an opportunity that many flippers are missing. The financing challenges are actually creating opportunities for cash buyers or flippers with established lending relationships. Properties that would normally have multiple offers are sitting on the market longer because fewer investors can access quick financing. This brings us to a critical point about strategy. The most successful Florida flippers right now are thinking like business owners, not speculators. They're focused on consistent singles and doubles rather than swinging for home runs. They're building systems that allow them to evaluate deals quickly and execute efficiently. They're also diversifying their strategies based on market conditions. When flip margins are compressed, they might wholesale more deals. When rental yields are attractive, they might hold properties longer. The key is having multiple exit strategies for every deal. Risk management has become absolutely crucial. The days of using maximum leverage and hoping for the best are over. Successful flippers are maintaining larger cash reserves, being more conservative in their after-repair value estimates, and building bigger buffers into their renovation budgets. They're also paying much more attention to holding costs. In a slower market, properties can take longer to sell, which can quickly eat into profits. Many flippers are now staging properties, offering buyer incentives, or even providing short-term seller financing to accelerate sales. One trend that's particularly interesting is the focus on energy efficiency and sustainability. Florida buyers are increasingly interested in properties with lower utility costs and environmental features. Flippers who understand this trend and incorporate energy-efficient improvements into their renovations are seeing faster sales and higher margins. Solar panels, efficient HVAC systems, and improved insulation aren't just nice-to-have features anymore. They're often the difference between a property that sells quickly and one that sits on the market. The demographics of Florida homebuyers are also shifting in ways that create opportunities for smart flippers. The traditional retiree market is still important, but Florida is attracting younger professionals, particularly in technology and remote work fields. These buyers have different preferences and priorities than traditional Florida buyers. They value open floor plans, home offices, and modern technology integration. They're less interested in formal dining rooms and more interested in flexible spaces that can adapt to work-from-home lifestyles. Flippers who understand these preferences and design their renovations accordingly are seeing better results. Another demographic shift is the increase in international buyers, particularly from Latin America. These buyers often have different aesthetic preferences and may value features that domestic buyers don't prioritize. Understanding your local buyer demographics can provide a significant competitive advantage. Let's talk about timing, which has become more critical than ever. The seasonal patterns in Florida real estate are more pronounced now than they were in the past. The peak selling season from January through April offers the best opportunities for quick sales and maximum prices, but it's also when competition among flippers is fiercest. Many successful flippers are timing their projects to complete during the peak season, but are acquiring properties during slower periods when they can negotiate better prices. This requires careful planning and execution, but it can significantly improve profitability. The key is understanding not just when to sell, but when to buy. Some of the best acquisition opportunities happen during the summer months when fewer investors are active, but you need to be prepared for longer renovation timelines and potential weather delays. Weather is actually a bigger factor in Florida flipping than many people realize. Hurricane season can shut down construction projects for weeks. Even minor tropical storms can cause delays and damage. Successful flippers build weather contingencies into their project timelines and budgets. They're also increasingly aware of flood zone issues and climate change impacts. Properties in flood-prone areas are becoming harder to flip profitably because insurance costs are increasing and buyer awareness is growing. Understanding flood maps and insurance requirements is now essential for Florida flippers. This brings us to an important point about due diligence. The level of research required for successful flipping has increased dramatically. You can't just look at comparable sales and estimate renovation costs anymore. You need to understand zoning restrictions, HOA requirements, flood zones, environmental issues, and local market trends. Many flippers are hiring professional inspectors even before making offers, particularly for properties with potential structural or environmental issues. This upfront cost can save tens of thousands of dollars and months of delays down the road. Technology is also changing the flipping game. Successful flippers are using project management software, cost estimation apps, and virtual staging tools to improve efficiency and reduce costs. Some are even using drones for property assessment and marketing. Virtual reality and 3D modeling are becoming more common for higher-end flips, allowing buyers to visualize renovated spaces before they're complete. These tools can justify higher prices and accelerate sales. But technology is a double-edged sword. Online platforms have made it easier for investors to find deals, but they've also increased competition. The days of finding great deals in the MLS are largely over. Most profitable flips now come from off-market sources. This is where relationships become crucial. The most successful flippers have networks of wholesalers, real estate agents, contractors, and property managers who feed them deals before they hit the open market. Building these relationships takes time, but it's essential for long-term success. Networking isn't just about finding deals. It's also about learning from other successful investors, staying current on market trends, and accessing resources like contractors and lenders. The most successful flippers are active in local real estate investment groups and maintain relationships with other professionals in the industry. Let me share some specific strategies that are working in Florida right now. One approach that's gaining traction is the micro-flip or wholesale flip model. Instead of doing full renovations, some investors are focusing on properties that need minor cosmetic work or simple repairs. These deals have lower profit margins, but also lower risk and faster turnover. Another strategy is the luxury flip approach. Instead of competing in the crowded middle market, some flippers are focusing on high-end properties where buyers are less price-sensitive and margins can be higher. This requires more capital and expertise, but it can be very profitable for experienced flippers. The rental flip hybrid is also becoming popular. Flippers buy properties, do basic renovations to make them rentable, then hold them as cash-flowing assets while they appreciate. If the market improves, they can sell. If not, they have a performing rental property. Some flippers are also exploring the short-term rental market. Properties in vacation areas can be renovated and operated as Airbnb or VRBO properties, potentially generating higher returns than traditional flips or long-term rentals. However, this requires understanding local regulations and having systems to manage rental operations. The key to success in Florida flipping right now is specialization and systemization. The investors who are thriving have chosen specific niches and become experts in those areas. They might focus on properties under $50,000, or houses built before 1960, or properties in specific school districts. This specialization allows them to evaluate deals faster, estimate costs more accurately, and build relationships with contractors who understand their specific needs. It also helps them understand their target buyers better, leading to more effective renovations and faster sales. Systemization is equally important. Successful flippers have checklists for property evaluation, standardized renovation scopes, and established relationships with service providers. They track metrics like time to acquire, renovation duration, carrying costs, and sale timelines. This data helps them continuously improve their processes and profitability. Financial management has become more sophisticated as well. Many flippers are using detailed cash flow projections, sensitivity analyses, and risk assessment tools. They understand exactly how changes in acquisition cost, renovation expenses, or sale timeline affect their profitability. They're also more strategic about leverage. While some flippers are using less debt to reduce risk, others are using creative financing structures to improve their returns on investment. The key is understanding how financing impacts both risk and profitability for each specific deal. Looking ahead, several trends are likely to shape the Florida flipping market. Climate change and sea level rise are making some coastal properties less attractive to long-term investors. Insurance costs are increasing throughout the state, affecting both holding costs and buyer demand. Population growth is expected to continue, particularly in inland areas that are less susceptible to climate risks. This could create opportunities for flippers who understand these demographic shifts and position themselves accordingly. The work-from-home trend is likely to persist, creating ongoing demand for properties with home office space and high-speed internet capabilities. Energy efficiency will probably become even more important as utility costs continue rising. Regulation is another factor to watch. Some cities and counties are implementing restrictions on short-term rentals, which could affect flippers targeting that market. Affordable housing initiatives might create opportunities for flippers willing to work within inclusionary housing programs. So where does this leave us? Is fix and flip still profitable in Florida? The answer is yes, but with important caveats. The easy money has been made. The market has matured to the point where success requires skill, capital, and systematic approaches. Amateur investors are getting squeezed out, but professionals can still generate solid returns. The key is understanding that flipping in Florida today is a different business than it was 5 years ago. It requires more capital, more expertise, and more sophisticated strategies. But for investors who adapt to these realities, opportunities still exist. The most important advice I can give is to start small, focus on learning, and build systems before scaling. Don't try to compete with experienced flippers on their turf. Instead, find niches or markets where your efforts can have maximum impact. Develop expertise in specific property types or geographic areas. Build relationships with contractors, lenders, and other professionals. Track your metrics religiously and learn from both successes and failures. Most importantly, approach flipping as a business, not a get-rich-quick scheme. The investors who treat it professionally are the ones who succeed long-term, regardless of market conditions. Florida's fix and flip market may be more challenging than it was in the past, but it's far from dead. For investors who understand the new rules and are willing to play by them, profitable opportunities still exist. The question isn't whether you can make money flipping houses in Florida. The question is whether you're willing to do what it takes to succeed in today's market. If you found this analysis helpful and want to dive deeper into specific Florida markets or strategies, make sure to subscribe and let me know in the comments which topics you'd like me to cover next. The real estate investing landscape is constantly evolving, and staying informed is crucial for long-term success.